Welcome back. I'm Pratap here. Today is 26th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts. Some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Just click on the link. Now we are into the playlist supply demand zone price action course. And all the training lessons are available here, but you need to start your training from lesson 1.1. For that, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday we identified 9 high liquidity zones from daily and 75 minutes time frame. The first one is Hindustan Copper. This is a daily high liquidity demand zone. So we have a ERC candle. This can be treated as a rally candle, two base candles, and then again a rally candle. This is what our software identified as a daily high liquidity demand zone. So you need to identify a fine-tuned 5-minute zone to plan your trade. So for that, first we need to fine-tune the 75-minute zone. So I'm changing to the 75 minutes time frame. Here we identified two 75-minute zones. One is rally, base candle 1, 2, 3, 4, 5 base candles, and then a rally candle. And also you have again, this is a drop ERC candle, can be considered as a drop, and 1, 2, 3 base candles and a rally candle. So this is the way two 75-minute zones are identified, fine-tuned zones. And again within these 75, we should identify fine-tuned 15-minute zones. So I'm changing the time frame to 15 minutes. So in the 15 minutes, here you have a rally candle. This is a rally at the hidden body, a rally base rally. And again you have a rally base rally with hidden body. And again here rally, two base candles, and again a rally. So this is the way we identified 3 15 minutes fine-tuned order flows. Within these 15 minutes, again you need to identify fine-tuned 5-minute zones. So I'm changing the time frame to 5 minutes. So here in the 5 minutes, you have a drop, two base candles, and a rally. Actually, you should draw a zone like this. But what I'm doing, I'm adjusting the zone exactly at the within this daily zone, so that order flow is exactly within the daily. Once prices enter in this zone, we will plan our trade, because many times prices enter into the daily zone and they pick up the order and they move. If you have any fear that prices may not reach daily just before it will go, then you can fine tune like this. Either way is acceptable. It is all depending on our risk management. So with this, risk will be reduced, but sometimes there might be chances that just before reaching it will start moving up. That possibility is also there. But anyway, today prices entered deep inside. They just touched the distal line of this fine-tuned 5-minute zone, and then again they started moving up and finally reached the 15 minutes target zone. This is the 15 minutes target zone. We have ERC candle, base candle, drop candle, and this zone has been getting tested several times. and today it reached. And when we got the entry? At 9 o'clock 40 minutes, 5 minutes candle we got the entry, and then when it reached the target at 11 o'clock 35 minutes. So within 2 hours your trade is completed. And how much profit we got? Let me open the Excel sheet. Hindustan Copper, it has given 21,200 rupees profit, which is 5.7% ROI as per one futures margin cost. Because today is a trading expiry day generally margin cost is very, very high. So that's why you need to go for next month's future you have to take. The October's future, because September's future is expiry date for today. Today is the last Saturday. So we should not trade on the expiry day. It is quite dangerous, especially in equity stocks. And another advantage going for, because a lot of rollover will take place next month, and also the margin cost also will be very low compared to current month expiry date. So that's why based on October's futures margin cost, we got 5.7% ROI. Hindustan, this is about Hindustan Copper. The next month is SBILIFE. This is also a daily high liquidity supply zone. You have a rally candle, 1, 2, 3, 4 base candles and a drop candle. This is what identified by our software. Rally base drop. This we fine tuned with 75 minutes time frame. You have a drop, base drop is there, and also you have a rally base drop is also there. This again fine tuned with 15 minutes time frame. Actually, earlier what I did, I just left this drop base drop because there is no proper 15-minute zone. In my earlier analysis, I just left this. I didn't fine tune. But today I fine tuned this. Because today after the price action, in the market price action, I got some clues to identify the aggressive trade. So it's a very interesting learning. Everybody please concentrate. I think this one is already I have explained earlier. If I don't know this stock is already I explained earlier sessions or not. We have a drop base drop, 15-minute zone is there. And again in 15-minute zone there is no proper fine-tuned 5-minute zone. Drop so many base candles and then drop. So this will be violated. But there above drop base drop, this can be used as an aggressive trade. Why aggressive trade? Because prices were nearing to the zone and started moving down, able to hold. Previously, I didn't analyze this. But today after price action in the market, I got some interest on this particular area. Let me explain. Today, have you noticed? First, let me delete this, then you will get clarity. See, prices are coming here and coming down. Again came here and again came down. Actually, first time when prices today morning at 9:20 candle, it reached and then came down. Immediately, your focus should be in this area. Why? What made prices come down? Generally, how I do my analysis? I draw a horizontal line at this area. Now I have seen there was also a rally base drop. Just before entering into this blue color area, prices came. Today, exactly blue color area they went. And what could be the reason? The reason could be in 5-minute zone. You can identify an interesting pattern. Failed ERC candle, drop. It can be considered as a drop. Failed ERC candle. Why drop? Because prices were moving down, moving down. Don't look into the body. Failed ERC candle, body is very small. So the color of the body doesn't give any importance. You need to see only the price action. This is the way you need to understand the failed ERC candles. And here you have a candle. This is looking like a leg candle, and also it can be looking like a base candle in between. Why? Because it is not having a less than 50% body, and also it is not having more than 75% body. That means the body of this candle is between 50% and 75%. When I calculated, it came around 67%, 67 or 68%. And then you have a drop candle. So what I did, because such kind of candle, depending on the situation, you can consider either as a base candle or a leg candle. The candle body is in between 50% and 75%, the medium size candle. I am not talking about large candles. Large candles cannot be used as a base candle. See, this is a failed ERC candle. It is having less than 50% body. You cannot use this as a base candle. In lesson 3, lesson 1.3 or lesson 3, one of these lessons, I clearly explained the rules. Base candle can be either a small candle. Small candle, you don't bother about the rules. It can be 100% filled also. Small candles can be used as a base candle. Small means tiny candles. Medium size candle rules are applicable. Less than 50% body should be there for the base candle. For leg candle, greater than 75% body should be there. I didn't explain about this scenario in the lesson 3. Which one? The candles not having less than 50% and also not having more than 75% body. Such kind of candles, how to treat, I didn't explain in the training sessions. The reason is I don't want to give any confusion in the initial stage. That's why I moved this topic to the advanced lessons. So in the coming weeks or coming months, I'll be explaining about all these exceptional scenarios, including failed ERC candles. At the time you will learn. But already in HLQ analysis videos, I explained these concepts even in the earlier videos. Some of you people who regularly attending my HLQ analysis videos, they are already aware of this point. This is not a new point. Depending on the situation, you can use. Okay, now because some price action clues are there, now I got the interest and I have drawn this zone. Can we use as an aggressive trade? This is the first price action clue. And today morning, so the zone is tested. Let me remove this blue color line. The zone is tested. Once the zone is tested, intraday you can plan second time trades generally allowed intraday. But if it is not intraday, once the zone is tested, you cannot plan. Within intraday you can take a risk. But intraday also sometimes when you plan second trade, that might be violated. That possibility is also there. Sometimes. That's why the risk is there. So those who can accept the risk, they can plan. But why definitely we can take a trade? See here. Again there is a stocks near during the intraday. These clues should be used only in intraday. You cannot carry forward for the other trading days. Again came near and came down. That means institutions might have added a new order flows during intraday. So next time again prices enter, definitely you can plan your trade. This is one thing. Next, not only this, I also went to 1 minute time frame, I did my analysis. In the 1 minute time frame, see here we found 3 order flows. Time being, let me reduce the color thickness so that I can draw 1 minute zones. Okay, this is a 5 minute zone. Because color is reduced, don't think it is a 15 minute zone. This is the 5 minute zone. Now I am going to draw 1 minute zone here. See, we have a drop, we have 1, 2, 3, 4 base candles and drop candle. This is a medium size leg. Okay, we can include as part of the base. And also here, you have one more rally base drop. One more order flow is also there. two order flows are there. And currently, see here, already this 1 minute zone is tested previously. And today, again one more test in this zone. Again one more, almost near to the zone, one more. And one more again rally base drop is also created. Generally, LOTL zones will be created in high liquidity zones many times. At least it need not be. LOTL zone is there. If it is, you should not treat that as a high liquidity. But think in the reverse way. If it is a high liquidity, there are many times LOTLs will be created. That means new order flows will come in this area. New order flow, again the same zone. But if you refer your original zone, came very near and again came down. Next time prices enter into this zone, again you can plan a trade because a new order flow is there in this area. Because rally based drop is created. And by all these, assuming this 1 minute as a high liquidity zone, but there is a possibility this might be violated, this 1 minute zone. If this is violated, there is one more order flow is there on the top. On the top, one more order flow. That is the reason why combined both these zones. I am deleting this. Now I am increasing the color thickness. Now combined both, I am treating as a entire 5 minute zone. Now go to the 5 minute zone. This is the 5 minute zone. Sorry. This is the 5 minute zone. This 5 minute zone is having a 1 minute order flow is there. At the top we have again another 1 minute order flow is also there. Even the first, whichever we are thinking, the 1 minute could be high liquidity. If that violates, the above order flow also may work. So that is the reason why my trade plan is based on this 5 minute zone. I am treating this zone as a drop candle. This is a failed ERC as a drop. This is the base candle and this is the drop candle. And already my first price action clue near to the zone. And the second price action clue just entered. Maybe there could be more order flow. Third price action clue, again prices went near and came till this. See here, price action clue. Not only you should not see there is a rejection. After that there is a big fall, a considerable fall. See here, it touched and considerable fall up to this. Actually our target should be, this is the one. There should be a 15 minute zone. Here is the 15 minute zone. This should be our target. Sorry, let me change. This demand zone should be our target. But actually this demand zone is not reached. The reason is that there is a 1 minute high liquidity zone is there. See here, rally, base, rally. This is the first test, this is the second test, this is the third test, almost close to this. This is the fourth test. And this is the fifth test. Multiple times this zone. At least after seeing multiple tests, maybe 2 or 3 times, I confirmed this could be a high liquidity zone. Currently this is preventing the stock not letting up to this our target 15. That's why I fixed this 1 minute zone is my target instead of 15 minute zone. See, first time when prices entered, until this high liquidity zone area, it pushed. Second time again prices came very close. Once again it gave a push up to this 1 minute high liquidity zone area. So that means when prices are reaching, the order flow in this area is pushing the prices to a considerable amount or a considerable level. Just one candle it pushed and again it went up. You cannot consider them as a rejections. Rejections means prices should reach near to this, then a fall should start. See here, prices came and the rejection, considerably there is a fall, sharply. And here also came near and sharply prices came down. So by keeping all these observations, now let me shift to the 5 minutes time frame. By keeping all these observations, I decided definitely we can plan another trade here. By the time already we missed 2 opportunities. This is the first opportunity, this is the second opportunity. Why we missed this first opportunity? This is a good opportunity. This is another good opportunity. Why missed? Because we don't have belief on this zone. Drop base drop is not really having some concern. This is looking like a normal zone. And moreover, initially not consider this as a zone at all, because this candle is not exactly a base candle and also not exactly as a medium size leg candle. It is in between. So didn't give importance to this. Even though there is some price action, sometimes small price action clues will be there. We won't keep everything in our mind. A clear-cut price actions, then only we focus on that area. But according to me, this price action is not really a great price action, because here the zone is not a clear zone. This candle didn't convince me as a base candle initially. But after seeing this test, then realized there is already a price action earlier. Then decided to plan a trade. After that I saw 1 minute zone, and after multiple tests I confirmed that could be a high liquidity. Then planned a trade when prices are entering into near to this area. Not only me, anybody should think like this only. This is the way you should understand the price action. If you didn't have such kind of thoughts, whatever I am explaining, that will be giving you now experience. From my experience, you will start observing in the coming days like this. Exactly the way how I am thinking, you will also think the same way. Because the rejections near to this, a considerable. The rejection means not just a rejection of this candle. The rejection followed by the price action. All these candles is part of this rejection. That is what you have to understand. See the rejection. Next continuation is part of the rejection. The whole thing you need to consider as a rejection. Here also the whole thing you should consider as a rejection. And this is considerable. Because this is considerable, we are assuming there is a strong order flow in this area. And finally reached this area. And we got a trade here. And after that slowly it reached the target. This is the way SBILIFE has given a profit 6,300. This is 5% ROA. This is a 5 minutes aggressive trade. Actually, it is a 1 minute aggressive trade. Strictly speaking, it is a 1 minute aggressive trade because there is a 1 minute order flow. But what I did, combine two multiple 1 minutes into a 5 minute zone. So that's why I have to trade. This is a 5 minute aggressive trade. Inside a daily HLQ zone. So this is an aggressive trade. Please remember. The first one, Hindustan Copper, is a fine-tuned zone. But this is not a fine-tuned zone. This is a aggressive trade. It is not a fine-tuned zone. This is a 75-minute zone. Without 15-minute zone, we directly drawn the 5-minute zone based on the price action clue rejections. Strictly speaking, 1 minute high liquidity zone is there in that 5-minute zone. But I combined multiple 1 minutes. Finally, we formed this. So that way, stop buffer kept a little above this zone. And this is the way we got 1:3.5 RR. Earlier, Hindustan Copper, we got 1:4.5 RR. Hindustan Copper, the first trade. This is 1:5.5, not 4.5. This is 1:5.5 RR. So these are the only two successful trades we got, and one stock is violated today, and we know that the zone will be violated because the fine-tuned zone is already tested earlier. The ONGC is a 75 minutes high liquidity demand zone, and today see the entire zone is violated because earlier in this candle this fine-tuned area is tested. That too type 2 proximal is tested, not type 1. If type 1, we would have considered one more trade at type 2 in high liquidity zones. This is the type 2, and moreover risk is also very, very small. So that's why taking a trade. But anyway, let me show you how I fine-tuned. So this is the ERC candle as a leg-in to base candles and a rally candle. This is the way we consider rally base rally. And this one fine-tuned with 15 minutes time frame. So I consider this as a leg in, 2 base candles and a rally candle, drop base rally. This 15-minute zone again fine tuned with 5 minutes time frame. So here it is like a drop, 2 base candles and a rally with pro gap. Small pro gap is also there. The pro gap order flow is consumed and just the zone is tested. So that is the reason why I have a concern to take the second trade in this zone. See here, the pro gap is completely consumed and just entered into the zone, and then there is a rejection and moved up. And the only thing is, sometimes prices were started near to this. Generally you get a doubt, maybe the order flow is very strong. So that's why what I did, I went to 1 minute time frame and I have seen what happened in the price action. The 1 minute again, by picking the order flow, drop base drop, here again a pro gap is there. Exactly in that pro gap area, some price action took place. Sorry. Let me draw horizontal line. See, once already prices entered into this pro gap area and consumed, maybe institutions might have added more order flow in this area, maybe. So that is the reason why at that pro gap area, it was some price action. Some orders were getting holded here. Here. Maybe not because of this zone. So that is the reason why the zone is violated completely today. If anybody would have thought all these price actions is because of this fine-tuned 5-minute zone, and if you are planning a trade today, it would have been stopped out. But anyway, you can't take a trade here because morning 9:15 candle itself, it is violated. See, this is morning 9:15. 9:15 candle itself prices came down and moved up. After that, in the following, completely zone is violated in the following candles. So anyway, you didn't get a chance to, even if anybody wants to plan a trade second time, you won't get a chance. But anyway, as per the rule, the zone is tested. Taking second trade is with your own risk. Otherwise, there are higher chances the zone will be violated. That is what happened. See, if this test is today, definitely you would have planned one more trade. But when this test was happened, this is happened on 25th September. Once a zone is tested, you cannot plan second trade in the following day. Same day, maybe you can plan second trade or even third trade also. Sometime you can plan. If your earlier trades are successful, there is nothing wrong in trying investing some amount that already you got from your profits. But if it is a different day, already tested, moreover, it is a type 2 proximal entry. But definitely, these price actions might have distracted some of you people to plan a trade. But anyway, your trade also won't be executed because in the morning 9:15 candle itself, the order flow is completely violated. So this is the ONGC. And let's look into the remaining stocks one by one, just to tell you how I fine-tuned the zones. Because next time again, any of these stocks identified by our software near these zones, this analysis will be helpful to you to plan your trades. Hindustan Copper already we discussed. About India. About India is having a daily high liquidity supply zone. This is the one, drop base drop identified by our software. And 75 minutes I fine-tuned the drop base drop. And 15 minutes there is no proper structure. The reason why no proper structure I am saying, the price action is not really comfortable to me, even if you want to consider. See here, drop 1, 2, 3, 4, 5 base candles, 1, 2, 3, 4, 5 base candles drop. See, this is what I have already drawn 15-minute zone, but I am not comfortable. Why I am not comfortable? This price structure, see, prices should move in a narrow way, but going down, going up, in such kind of price structure is there. Mostly in the lower time frames, you see a very bad price structure. That is what you experience. Go to 5 minutes time frame, you will understand. See here, the 5 minute structure is not at all good. So this is the medium size rally candle, then drop candle, in between no base candles. Even if you want to consider medium size candle is part of the base as a base candle, still you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 base candles. Drop, 17 base candles, drop. Such kind of zones, what will happen? Easily it will be violated. See, that is what you see here, how easily the zone is violated today. Opened and finally zone is violated. The fine-tuned area. That's why we don't take trades when any zone is having more than 6 base candles. Or even if the price action is not good, earlier even with less candles also, at fine-tuned 5 minute zone you will see a bad structure. That is what we experienced for this stock. Next one is Axis Bank. This is also a daily high liquidity supply zone. We have a drop, base, drop identified by our software, and this I fine-tuned with 75 minutes time frame. "75-minute structure is not really clear. If you consider this as a drop candle, 1, 2, 3, 4, 5, 6 base candles, drop. That means same zone again you have to drop. Same zone. A little extra again you have to draw from here to here, till here. If you ask me, we have to draw zone like this. This is 75 minutes supply zone. The 75. See, this is the daily supply zone, this is the 75. So again inside 75 you have 15 minutes zone. You have a proper 15 minute zone. Rally, base, drop. See, a very big drop candle. You have a, okay, it looks like a failed ERC candle, but you have at least 40%, 30 to 40% body is there for ERC, for the ERC candles. You can be considered as ERC, not a failed ERC. And moreover, the body is completely moving out of the zone. That is the most important characteristic. Even if you cut majority of this tail, still you can qualify this as a leg out candle. Such kind of body it is having. That's why you don't really care about the tail. But anyway, it is a ERC candle, bigger candle. Rally base draw, 15 minute zone. But see, have you noticed that the price action close, the rejections near the zone? So that is indication that there is a, even you can, in case even if you don't consider this 75 minute zone, even if you don't consider this 75 minute zone, still you can plan an aggressive trade here. Even if you draw the 75 minute zone, if you are convinced with this 75 minute zone, this is going to be a fine-tuned zone. Either way it is okay, you can plan your trade. Now inside this 75, we identified a fine-tuned 5 minute zone. I am going to the 5 minutes time frame. Now look into the 15 minute zone. Inside the 15 minute zone, you have a rally, base, drop. All these price action close. This is the time prices came very near to this zone and then came down. So next time definitely you can plan a trade. But unfortunately today prices did not enter into the zone, so we didn't get any trade opportunity. Here also came near and again coming down. Next time if our software displays software report, because some of you people, again if you plan a trade, it's a luck based trade. Let us assume tomorrow price, our software did not display this stock. By seeing today's analysis, you are planning a trade here. It may work or it may not work. 50-50 chances. I can't give you 80% success rate. I can give you 80% success rate only when the zone is listed by our software, because high liquidity zones are valid only for one day. Today, end of the day, if my software displays high liquidity zones, they are valid only for tomorrow to get the 80% success rate. Suppose tomorrow this stock is not displayed, but price has reached this fine-tuned area. If you take a trade, the chances of getting success is 50-50. If your luck is there, you are a lucky person, it will push the prices, you get a good profit. If luck is not in your favor, tomorrow this zone, fine-tuned area might be violated and prices will go up. Because finding the stocks near demand and supply zones, a special algorithm is there. Today's the overall market volatility my software will consider. Then only it will list stocks near demand and supply zones. That volatility adds additional flavor to the high liquidity zone success. This is what you should understand. Previously also I explained this point several times in HLQ analysis videos. I think even in lesson 21.3 also, HLQ zone strategy I explained. There also I explained this point. Okay, next one is Dr. Reddy's lab. This is also a daily high liquidity supply zone. We have a drop, 2 base candles and a drop candle. This area I fine-tuned with 75 minutes time frame. Identified 2 75 minutes order flows. One is a drop base drop, another one is a drop base. Actually this is, I couldn't consider as a drop, maybe a medium size candle, so I combined everything together. And with hidden body, this is a drop candle. So these 75 minutes again fine tuned with 15 minutes time frame. So in the bottom one we have, this is a drop candle, ERC candle, failed ERC, 2 base candles and a drop candle. That way I considered. Maybe some extent we compromised at this leg-in and drawn this zone, but okay. Because I already explained you, while fine tuning the zone, sometimes you can compromise with the candles for leg-in point of view. And this is again a drop base drop. This is a medium size leg candle. There is a drop base drop with a hidden body. And here I consider this as a ERC candle, failed ERC candle as a leg-in base drop. Because almost the size is twice bigger than this candle, very close to maybe. This I couldn't draw this zone. Actually we can also draw a zone like this. Rally, 3 base candles and drop. But somehow I am not fully comfortable with this. So I didn't draw this, but time being I am limiting. Later on we can look into this. Or risk management point of view also you can draw like this. But anyway, this entire thing is 15 minute zone. Sorry for my mistake. I made a mistake. I'm extremely sorry. This is actually 15 minute zone. I am talking about, this is not a fine-tuned 5 minute zone. Yes, this is fine-tuned 5 minute zone. You need to look at 5 minutes time frame. Now I am analyzing this with 15 minutes time frame. This is wrong. 5 minutes maybe we have a clear structure here. This is a 15 minutes time frame. Rally, 1, 2, 3 base candles and a drop candle. This is a valid zone. This is a drop base drop. Again this is a drop, 2 base candles drop. Now let me go to the 5 minutes time frame. Now you have a clear structure. Sorry for my mistake. Here you see you have a drop, you have 3 base candles and a drop candle. Here why I didn't draw multiple candles, 1, 2, 3, 4, 5, 6, 7. Even if you consider this as a failed ERC candle, as a drop candle, 1, 2, 3, 4, 5, 6, 7 candles are there. So that's why I didn't draw this zone. But this is a valid drop base drop. And remaining zones, see here, This is a rally candle, this is a drop candle, in between no base candles, again a drop, again with hidden body, again a drop. So no base candle. So this zone will be violated easily. So that's why there is no fine-tuned 5-minute zone. And also there is one more here also. I am not comfortable with this, all this. Leg out also I am not comfortable, first of all. And candles 1, 2, 3, 4, 5, 6, 7. Drop 1, 2, 3, 4, 5, 6. And 6 candles are there, but structure I am not convinced. But still this is not a valid leg out. That's why I don't want to take any risk in this area. Not planning. Maybe I have to consider this is a leg out 1, 2, 3, 4, 5, 6, 7, 8 candles. That's why I didn't consider this zone. If you want to draw 5-minute zone, you can draw from here till this candle here, but 8 candles are there. This you can consider as a leg out. This can't be a leg out. Not at all feeling comfortable with this candle. So that's why I'm not comfortable thinking that this will be violated easily. Definitely this will be violated. And only order flow we have in this area. And small risk is there. So definitely we can plan a trade here. But anyway, today prices did not enter. We didn't get a trade opportunity. And the next one is Federal Bank. This is also a daily high liquidity supply zone. We have a drop base drop. This fine tuned with 75 minutes time frame. So this is the rally candle 1, 2, 3. Sorry, this is the drop candle. I'm sorry. This is the drop candle, ERC candle. Let me show you. Now you are seeing the candle, right? This is the candle. So this is the drop candle. We have 1, 2, 3, 4 base candles and a drop candle. So that's why within this area we have drawn this zone. This is the 75-minute zone. Inside the 75-minute zone, again fine tuned with 15 minutes time frame. In the 15, you have a rally base drop. Let me hide, you will get clarity. See, rally, 2 base candles and a drop candle. Clear 15-minute zone. And this zone I am not really comfortable, but still I have drawn drop, 3 base candles or 2 base candles, 1 medium size like part of the base that way. But if you hide this gap, you see, do you really convince it is a base candle? Or is it a medium size like candle or little bigger than medium? Anyway, benefit of doubt we added as part of this. Also part of the base. Drop, 3 base candles and drop. This is a medium size candle considered. I consider this as a medium size candle, part of the base. But still we have some doubts about this area. Always remember. So in the fine-tuned 5-minute zone, interesting point you will observe. Here you have, this is a ERC candle as a leg-in. You have a base, 2 base candles, and then a drop candle with hidden body. This is a drop with hidden body. Like this. This is a drop with a hidden body. This is a ERC candle. But this zone is already tested. So that's why even you have a doubt, 15 minutes you have a doubt, right? Still no issues because that candle already tested this fine-tuned area. So that's why you can't plan any trade in this zone. It is a tested zone. So this rally base drop you can plan. What happened? Analysis is slightly changed. Is there any dividend declared for Federal Bank? Let me check. Rally base drop. This is the one. This is a fine-tuned area where we want to plan a trade. But anyway, today prices didn't enter into this location. They didn't enter. So Federal Bank we didn't get, and Lupin. Lupin already explained how I fine-tuned this zone earlier. The same analysis, I didn't made any changes. I think yesterday we discussed about Lupin. Please check your yesterday's analysis video. I have already explained how to fine-tune this zone. In the 5 minutes time frame, let me show you directly. I will go because I already explained this earlier. Lupin, we didn't plan any trade. The reason is it is already tested. Actually, Lupin we fine-tuned up to type 3 proximal. Type 3 proximal is also tested. That's why Lupin we can't plan any trade. Already we discussed this point in our previous videos. Anyway, prices didn't come into this Lupin. There are higher chances it might be violated. SBILIFE, we got a trade. We discussed ONGC, we already discussed. And last one is India Cement. This is a 75 minutes high liquidity supply zone. So this is a drop base drop. This fine-tuned with 15 minutes time frame. Sorry, 15 minutes. In 15 minutes time frame, you have a rally base drop is there. And go to the 5 minutes time frame. 5 minutes time frame, the structure is not really convincing structure because it is a ERC, failed ERC candle, and followed by another drop candle, followed by another drop candle, no base candles in between. You can't keep this candle in the base because ERC candles you cannot keep. Only medium size candles only you can keep in the base. If earlier base candles are there, medium size leg candle also you can keep in the base. But ERC candles are bigger than the medium size candles. Whether the failed ERC or normal ERC means your clear drop candle. In both of them, you cannot keep them in the base. Okay, ERC candle sometimes you can use, special scenarios you can use in leg out. Can we use this in the leg out as a leg out? No, you cannot. The reason is this body is not coming out of the base. If it is coming out of the base, probably some extent considerable move down is there. After coming out of the base, considerable move is there. You can consider this as a leg out candle. But see, when you draw the zone, if you want to really draw a zone, see, complete candle is inside the zone. It has to come out of the zone. It didn't come. So that's why you cannot plan as a leg out. Okay. So anyway, we didn't plan any trade in this stock. Also, it didn't get into the zone today. So these are the high liquidity zones identified from our previous report. Hope this analysis will be helpful to you for your better learning of these concepts. Let's all meet again in our next video.